This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week. Welcome to Monday. Looks like we're going to have some volatility show up. If you've been following the channel, that should not be a surprise since we know we're on our way to start heading for some cycle lows pretty much now, I would think. So I'll show you the charts when we get there as always, of course. Before we get into today, I have a very quick announcement. I have a backup channel on Rumble and it's linked in every one of the videos. You can follow me there if you've got an account. If not, just keep it in the back of your mind just in case anything should happen. And for those people that didn't like PayPal and wanted a new payment method for the camelfinance.co.uk website, that is very nearly done. So stay tuned for some updates about that. The big news over the weekend was that Moody's, for the first time in history, has just downgraded the United States credit rating. Moody's cited concerns over soaring US debt levels with interest on US debt set to hit 30% of revenue by 2035. So you can see here the downgrade has occurred for the first time in history. Moody's is blue. And a lot of the concern about this is when Fitch downgraded, the S&P 500 fell 10% in 3 months, the Russell fell 17% over the same time period, and yields surged as much as 23%. So a lot of people have been kind of worrying that this is what is coming off the back of this Moody's downgrade. Of course, there's a knee-jerk reaction, okay? The futures are currently pointing to an open over 1% lower for the S&P and about 1.5% for the Nasdaq, as you can see right here. But is it really the end of the world? Is it really the biggest surprise? I don't think so, right? We're approaching 27 trillion in national debt for the US. They're running a 2 trillion budget deficit, and these numbers are just incomprehensibly large. Ben here really summarizes it, I think. What do you call someone who can't even pay off their own interest payments but still decides to keep spending money on pointless stuff, right? America. Of course, America's not the only country or nation that is guilty of this. This is the entire fiat Ponzi system, and this is why Bitcoiners are so vocal about owning Bitcoin, and it's why I'm so vocal about owning gold as well. This is a house of cards that will eventually come tumbling down. For me, something that is a little concerning, of course, is off the back of the Moody's downgrade, needless to say, bonds are getting sold off at the moment, which of course forces the 10-year yield higher. Not what I want to see, right? This is really all of the easing that the Fed can do. This bond market is going to do more easing than the Fed ever could, but the only way it can help ease is to move to the downside, which means people have to buy the debt. But then the question becomes, why would you buy the debt, right? I wouldn't buy it. Would you buy the debt? No, of course not. So this could be the spanner in the works. I think this is going to cause us some problems in the short to medium term. We'll see about that. We'll keep tracking it. But I think what I want to do here is just a friendly reminder to the Camel Crew, okay, that over the weekend and for a while before that even, I've been talking about probably seeing this trend line violate number one. That was one thing I mentioned, into a cycle low early June, which is a second thing I mentioned, and then we get to finally find out which way the market's going to move, right? If it fails the cycle, we confirm that was a lower high bounce. This is a bear market, and we can only expect lower lows. And if the cycle holds and doesn't fail, then of course we can talk about seeing a run to new highs. But first, we probably do have to break this trend line. We probably do have to come and find a cycle low, and we probably have to do that for early June. Now, I also wanted to point out one other thing whilst we're here, okay? So not only is this normal and to be expected, but particularly the members, and I'm sure I said this on the main channel as well, I was talking about how it's easy for us to say this is going to happen, right? Pullback, trendline break, cycle low. But I said when we get here, it's going to be psychologically a lot harder to deal with, right? I was warning the members, certainly, and I'm pretty sure I talked about this on the main channel, that it's easy to say that, right? But it's not easy to do it. And I said that once we get here, it's going to be tough. There's going to be reasons, there's going to be narratives. And sure enough, okay, out of nowhere, right in time for a pullback to a cycle low, we've got the narrative to append to this dip, right? Every dip has its narrative, and now we've got our narrative to explain away the downside price action. But does it really matter? I make the case it does not, because we knew the cycle lows were coming, right? So this is just going to be a narrative, in my opinion, that is used to explain away the pullback into the cycle low, and then we get to find out what the market really has ahead of it. So if you're one of those people that's suffering a little bit or is feeling pretty concerned or this changes everything, just know it doesn't, right? It doesn't change anything. And once again, if you're finding it difficult, just remember, I told you you would find it difficult, right? It's easy to say buy the dip. It's easy to say buy the fear. Buy when there's blood in the street, right? But it's not easy to actually do it. So anyway, I'm going to keep doing me. We're going to stick to the plan. We're going to keep executing on the plan because that's what we do here. I imagine this will pass, but only time will tell. Of course, as always, I'm going to continue to point at this cycle low and say that is what we need to see for us to finally make a decision. Over in the world of Bitcoin, Bitcoin put in some very strange 4-hour candles yesterday. It pumped all the way up to about 107k, and as of right now, it's all the way back to 103k again. So I'm not really sure what that was about. It seemed that Asia were buying it and then for one reason or another decided to walk it straight back to the range. I don't really understand what that's about or why, but I can say that price action is pretty strange. And we can also continue to point at the work I've been putting out and showing you that, again, nothing's really out of expectations, right? I said there's probably 2 scenarios for Bitcoin. One of them was that we move slightly higher and then we come down into a cycle low in that early June timeframe, about the 6th of June. And the other one was that we were already topped. Okay, and we're heading down for a cycle low. When we pull up the chart, does it really look that different? I don't think so, right? I mean, it's a pop. It was a fake breakout. We're back in the range. So who cares? But we are now late enough in this cycle that we're on, I think today is day 43, and anywhere around day 45 for a top in a bullish cycle would be totally normal. And then we spend a couple of weeks declining into a cycle low before we can do the whole thing all over again. So I don't really see the problem here. I don't really see any rhyme or reason to stress about this. And I still think, again, we have to get to that cycle low, then we can make some assessments. We could even start to draw in validations underneath that cycle low if you're that way inclined. One thing that is pretty interesting here, okay, you may not be bullish enough because we've got crypto meets the swamp. This is on the cover of The Economist. Why is that significant? Because here is every crypto headline out of The Economist in the last 5 years. They were turning bullish on CBDCs and DeFi after the previous cycle was pretty much over, and now they're turning bearish on the whole industry again, just like they did after November 22. And of course, we can expect them to turn bullish at or after this cycle tops, because that's what they always do. And now when we pull this up, we can see, okay, at the top, they're bull posting on The Economist, okay? At the second top, they are bull posting. At the lows, they are bear posting, okay? Crypto's downfall. And now at the hard right edge, they are bear posting once more. Tells us to be open to higher prices walking forward. And I know a lot of people just really struggle to be super bullish here. I understand that. But if the extended wave is what's playing out right now, okay, we still have 3, 4, and 5 ahead of us. And in commodities, extended fifths are extremely common. We've seen it right here in gold in the 70s, and you can see how much ground is covered in a very little time. Seems to me like something like this could well be on the cards. And whether or not you think that's crazy, it doesn't really matter, okay? Because it's a market and anything can happen. We can go all the way to 0 and we can go all the way to 1 million and everything in between. So again, I just suggest that everyone keeps open to all possible outcomes. Ultimately, as I said, we are going to head for those cycle lows in both the stock market and in Bitcoin. For gold, I think gold is going to try to confirm a daily cycle low, but I also think it's probably going to get hung up at resistance and have to bounce around until we can find another daily cycle low and call that the weekly cycle low. I've been over this extensively with the members and the Slice crew, so I'm not going to repeat myself there. And it'll be really, really interesting this week to see if we can print a higher high above this wick, because if we can't, then we can still keep open to more downside in the yields and a little bit of easing. As ever, we'll keep taking that one day at a time. So other than that, welcome to the week. Welcome to Monday. I think we're going to try to go live at least once this week, so look out for that. Make sure you subscribe, turn the notifications on so you get notified when I go live. And other than that, have a fantastic week. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel